And
I do want to mention for everybody, I know I've been commenting on your chats, and thank you for saying hello. That's great to see everyone. However, if you have questions throughout the course of this webinar, don't put them in the chat. We miss seeing the chat because it goes so quickly. So what we'd like you to do is on your screen, there's a Q&A button. Put all your questions in there, because at the end, that's where we'll go to respond to your questions.
Yeah, exactly. I'm glad you mentioned that, because I would have forgotten it. And so the Q&A button should be your best friend. If you have a question, you can ask a question anytime during the presentation. Just know that we're not going to get to it till the end, and we have plenty of time. We only have about 15, 16 slides here. So we made sure that we only had, probably a half an hour of content, so we could have, another 15, 20 minutes of answering questions. So, all right, everybody, let's get started. So for those of you that don't know who we are crowdfunding lawyers, and we are a law firm out of Southern California that focuses on private placement memorandums, helping real estate entrepreneurs figure out how they're going to raise capital, figuring out other types of businesses, how they're going to raise capital, and putting that all together for them so they can do it legally. All right, so today's subject is about an opportunistic fund. And Nancee, why did we call this an opportunistic fund instead of an opportunity zone fund?
I know, and I'm worried people are getting confused about that.
Yeah, I did it myself. I already confused myself.
So there's been this rage of opportunity zones, and that's a totally separate thing. That is different areas of the country that are distressed economically. They're specifically designated as an opportunity zone. You get certain tax benefits for investing in those. I'm not going to talk anymore about those today. If you want to know about those, we have plenty of other webinars. So opportunistic fund is not opportunity zone fund. This is specifically focusing on all opportunities, not just what's in an opportunity zone.
Yeah, and as a matter of fact, we're going to get down to brass tacks on this, and what we really mean by an opportunistic fund and what it can mean to you. And so this is me and Nancee. And
because I'm trying to be really tall in that picture, and you're not that tall.
Oh, you're just really short.
True.
Yeah, so we, and the firm's been around since 2014. You guys know about us. I'm not going to get into the sales pitch on who we are. So the topics for today is we're going to talk about how to put such a fund together, and then give you some kind of ideas on what you could do possibly in putting a fund together. So Nancee, tell us about how to structure this.
All right, and I want to distinguish this because we get two main types of clients. We either have clients who come to us and have a specific property, and that's the one they want to raise their money for, and that's a single syndication. When we're talking about funds, this means you are going to be investing in more than one property. So starting with the flow chart, we'll start over on the bottom left. You have investors out there that want to come and invest in your entity. And so you create this investment LLC. This is your opportunistic fund. And with that, you're going to have subsidiary LLCs. We call those single purpose LLCs. And each single purpose LLC can purchase a property or whatever type of asset we are talking about. It just gives you, it's a structure set up to give you more flexibility in what you invest in and broader options. So you're not tied to just a single property. And then from that investment LLC, that's where distributions flow to your investors, and also managers or sponsors would receive their money from that investment LLC as well. So the money flows up from your single purpose LLC into your investment LLC and then to your manager.
Mm-hmm, mm-hmm. And so this isn't much different from any kind of else. I mean, it isn't any different than any other fund you would create. So you just want to make sure that you have some nice asset protection with the LLC, extra LLCs. So if you're going to be purchasing certain types of assets that need asset protection, like other pieces of property, you're going to want to hold them in their own special purpose entities, which you don't see on the screen here, but we do have this to own other LLCs or individual assets. So if you have bigger assets, like a multifamily building, for example, then you want to own that in its own LLC, and they would be an investment LLC. So, or you could call this fund LLC, whatever you want to call it. Okay, so we have 5 examples of assets that we've identified. Now, this isn't an exhaustive list. This is just what has come to us in the last several weeks. So Nancee, take it away.
Yeah, so real estate is probably the main one that we focus on, but not the only kind. And so that could be, we see a lot of multifamily. We've seen fix and flip, single resident funds, mobile homes, self-storage. So any type of real estate, if you're already in that market area and you know that market well, that would make sense for you to create a fund around that type of asset. I actually even saw one that does luxury homes, which I thought was a fun one to work on as well. So any type of real estate asset.
Yeah, and not just the hard assets, but also one thing I'm getting approached about a lot are notes.
Yeah.
I think there's going to be a huge opportunity in notes. I think there's already a huge opportunity in notes. I think it's just going to get bigger from here on out.
Yeah.
And then tell everybody about what we've gotten 2 phone calls about this in just the past 2 weeks. Go ahead and talk about that.
Just precious metals is a new up and coming one. With the flux in the economy and people not knowing, there's been quite a bit more interest in gold. And so that we've seen an uptick in interest in. So that's also a good one.
Particularly gold, but I also got a call. We got 2 calls about doing gold funds just in the last 2 weeks.
Yeah.
So 2 calls about doing gold funds alone, but then I also got interest in silver. So if you're thinking about precious metals, well, we'll get to that. So then, all right, let's talk about businesses.
Yeah. So people are looking outside the real estate box because there's definitely opportunities for that as well. So you've listed there the standalone businesses and franchise. I think we'll get into that a little bit more. One thing that we do see a lot of when I've seen our dollar stores, or not actually the name dollar store, but those types of stores has been a popular one that I've gotten a couple calls about. Restaurants, different types. And sometimes there's real estate involved with that, but also there's the business aspect that we're seeing people show interest in as well.
You know what? I got the complaint that you guys said I'm all foggy, so I'm trying to fix it. I just made it worse. Sorry. I don't know what to do.
You're glowing.
Yeah, it's like the Barbara Walters filter up here, right? This is really professional of me to be doing this during that. Now I made it all. Okay, that's that. All right, we're just going to go with that. I hope you guys think I look beautiful. Anyhow, I think it's the lighting. I don't think it's the camera. Okay, so let's talk. I want to address this real quick. One thing that is a misnomer or a misconception, I guess not really a misnomer, is that distressed does not necessarily mean opportunistic. Or really, I didn't really do this slide right now that I'm thinking about it, because really what this should say is opportunistic does not necessarily mean distressed. We don't have to identify distressed assets in order to have an opportunistic fund. However, you can buy distressed assets in your opportunistic fund, but it's not a requirement. And as a matter of fact, we're not really going to be focusing on the distressed nature of assets. We're really going to be focusing on opportunities and what that means to us. So I want you to keep that in mind as we go through these options, that no, you don't have to look for people who are desperate to sell, people who stopped making payments, people who, are shuttering their doors, whatever it might be. We're simply looking for opportunities that COVID-19 has created in the marketplace, or will continue to create as we go forward in the new economy. So let's start with, and I'm going to tell you, this was my inspiration. This next slide, if I can get to that next slide. This next slide, this lady right here, Kathy Crowe, was the inspiration for this webinar, okay? she said something to me one night. Kathy's a dear friend of mine. If you do not know Kathy Crowe and you are in real estate, you are missing out on a wonderful human being who knows more about real estate than I think anybody I know. And I'm not just saying that. Kathy's been a licensed real estate broker for 40 years. So this is her 40th year being licensed. And she knows everyone. You say to Kathy, hey, I was thinking about doing this. And she'll say, oh, I know that guy. And she always has a story about every single person I've ever mentioned to her. And as a matter of fact, I am ashamed to say a little bit that she saved me a couple of times from some really what could have turned out to be unfortunate business decisions because she knew information that other people didn't know. And it's the same with economic happenings right now, because Kathy gets phone calls every day from people who know, like, and trust her. And so the big phone calls she's been getting lately is that people just want out, right? Older property owners, particularly multifamily, who are like, I made a lot of money, I got a lot of cash flow, I have a lot of equity in here. Even if I take a haircut on the purchase price or the sale price, it's not a big deal because I'm still gonna make money. I've gotten what I needed out of this property and I just wanna get out. So what does this present to you, the budding or seasoned entrepreneur who wants to stay in the game? Well, it gives you the opportunity now to pick up, real estate that was at the top of the market, a couple of weeks ago or a couple months ago, that's now, at a discount. So not distressed. Remember, not distressed. These are not sellers who are distressed. They don't have to sell.
I have a good example, a personal example of that. We own a vacation rental property, and right now those have all been closed for shelter in place. So everybody who has these vacation rental properties, we're going to have a couple of months without income. Now there's a lot of work that goes into running these vacation rental properties, but they perform very well in California. Obviously there's high demand, and once we open back up, that's not going to go away. If anything, it will increase because people can get out. But for people in the short window who, they've already been working hard and they're sick of it, and this is a good time for them to just be done. But it's a great opportunity coming in the future, and there's no value lost in these properties.
Yes, I'd like to hear about said opportunity after the webinar.
Okay.
But Nancee, you also have, you've been inundated with calls lately for one particular asset class. And which asset class is that?
Self-storage.
Mm-hmm.
That's a huge one. You always need storage, but especially, I think you were the one that was saying, in low or in economic distress times, you need it. And when things are going great, you need it because you have a lot of stuff. That's always a good asset to look into.
We're getting tons of calls for self-storage, and a lot of people are looking to empty out their offices, for example, because they haven't used them for the last several months, and they're realizing they actually don't need them. So now they're like, where do we put all this office furniture? Which is a different thing to think about, right? Because usually we think about people moving out of their houses and then getting a self-storage unit. And it's actually different businesses now, including some retail and, restaurant supply and things like that are emptying their properties and putting their stuff into self-storage. So yeah. Just something also to consider. So a real estate, and we'll get into this more. We'll get into more about like how do you put a fund that focuses on real estate together? What can you do there? And we'll talk about that towards the end. And we've already gotten one phone call from one really big client that is looking at this. He talked to us several weeks ago, and I'm not breaking any client confidences or anything like that. He's publicly made videos telling everybody he's going to do this. But Grant Cardone is like, look, there's going to be opportunities out there, and I want to start an opportunity fund. And I said to him, an opportunity zone fund? And he said, no, an opportunity. Yeah. So you are in good company if you think you want to start an opportunistic opportunity fund, whatever you want to call it. Because he's seeing the available the available properties out there and wants to take advantage of them. Okay, so we mentioned precious metals. And we've had, I thought that was funny. So we've had several phone calls from several people looking to do a precious metals fund. Like I said, we just in the last 2 weeks alone, we had 2 calls about gold in particular, buying gold, mining gold, looking for gold, whatever it is, gold, and getting into gold. And this was kind of a surprise to us. We don't, in the past, I've done precious metals before. I've done mining before, but I have never done it where I've had such an influx of interest on it.
Yep. I think people are trying to think outside the box, think what opportunities are coming, and that is one that's popping up.
Yeah, exactly. So then this is my friend client Ryan. And Ryan has a company called Legion Works. And Ryan has decided that he wants to go out and buy software companies. He's going to go out and buy software companies and also develop software in-house, because he's seeing a lot of opportunities with people who've created these software companies and perhaps don't know how to market them, manage them, deploy them, whatever it might be. And he's seeing there's a squeeze on that now. And not only is there a squeeze on that now, but there's also an amazing opportunity for software as a service, because now we're in our houses more, we're meeting more online, we're using the internet and our internet connections more than ever. So our web presence and software as a service is going to become more important. So he's seen this as looking for business opportunities. Now, I'm giving you software as an example because I have it in front of me. Ryan actually filed on behalf of Legion Works a Regulation A offering. So we're doing this kind of software fund under Regulation A. He did it before COVID-19, but now he's kind of augmented his business just ever so slightly because he's seeing so many different opportunities in purchasing other software companies to be a part of his portfolio of offerings and software services. So have you seen any particular other asset classes other than, say, software in business opportunities, Nancee?
I think, and you might be bringing this up later too, but I have seen quite a few with restaurants. That's been a big one as far as businesses go. A little bit in software. I have a lot of calls of people just exploring what's out there, trying to get their ducks in a row to be ready to go when those opportunities are available. And not waiting until they're ready and then trying to get everything in place. So really it's about being prepared to jump on it when you see those opportunities.
Yeah, exactly. And that's what we're trying to get you guys ready for here, is that, like, look, if you're considering this, put it together, because the idea is to be, ready to go. Have your capital. And then when the opportunity comes up, the opportunity might not be here right now. It might not be here till August. But if you don't have money raised and a fund ready to go, then you're going to miss the opportunity, because everybody I've spoken to who considers them a futurist or economist doesn't see this era of depression, if you will, to be really long. So the opportunities are going to be they're going to be maybe plentiful, but it's going to be a short window of time in which you can act. Because the economy is going to bounce back. And not only that, but the thing we have to remember about money is that it doesn't get destroyed. It just changes hands. So there's people out there still with money ready to act. So you need to be one of those people with the money in your hands ready to act, which is why if you really if you have a strong consideration to do this, then you need to act quickly so that you're ready for the opportunities as they arise. Okay, so another opportunity I'm seeing is in franchises. And what I mean by this is, a lot of people spend a lot of money to get a franchise, get it implemented, get it going. And I saw this happen right here in Temecula, where we live in Southern California, tons of small gym franchises. And guess what? They're all closed. So, these poor franchise owners had this vision of owning this franchise, opening it up, having this grand opening, only to see the interest in the franchise itself, or the business itself, just go away with COVID-19. So tons of opportunities to buy, and this probably will more be in the category of a distressed situation of buying an owner who's struggling and just wants to get out. And also, I think there's going to be kind of it wouldn't be a trickle down effect, but like what do you trickle up? You can't trickle up. What do you do when you move upward? An upward trajectory, we'll call it. There'll be an upward trajectory, because what's going to end up happening is if people go out and buy individual franchises from the franchisees as opposed from the franchisors, this is going to mean the franchisor is going to have to change their business model, perhaps cut their prices temporarily in order to maintain franchise sales at the franchisor level. And that is, I don't have any proof of that happening. These are franchise agreements are run by, are highly regulated, much like securities. So I don't know if they even have the ability to make those changes or those adjustments, but they probably can offer specials, and you could probably even see specials from franchisors out there.
Wait, before you pass on this picture, so you got to go back. So someone said, I'm glad a Star Wars meme made it into the presentation. So I love Star Wars and watch it all the time, and I cannot place where this meme came from. So please enlighten me on which scene this is. This might be when, well, I don't want to do any spoilers, but okay. Is this when Darth Vader's burning up as a kid? All right. Yep. Okay. I got it.
So not to distract, but my middle child, Tom, has made to me what is the funniest recreation of that scene with Legos in stop motion animation. And if any of you are interested, I'll post it on the Facebook group, the Crowdfunding Lawyers Facebook group. If you're not part of the Crowdfunding Lawyers Facebook group, I strongly recommend you join there, because we answer questions in there, throughout the week, and have extra little videos and stuff like that are exclusive to that group. But I'll post the little Star Wars, silly Lego animation as well. Okay.
Side note, sorry, not important.
So, all right. So how do you do this? What do you do? How do you do it? So you can do it almost any way you want, really. You can do it under 506B. If you recall, 506B allows you to raise as much money as you want. No general solicitation from 35 sophisticated investors and up to as many accredited investors as you want. And then C, accredited investors only, but then you can do general solicitation. And then Regulation A, like our buddy Ryan Betancourt at Legion did, you can do a Regulation A and open it up to the entire market using general solicitation. So those are your three choices. If you want to know more about any one of those subjects, we have tons of webinars. I'm not going to bore the rest of the audience. I want to make sure I get to their questions. So other things to consider: what's your exit strategy going to be? Like, are you going to hold on to the assets and sell them off? And how many years? When do you think the market's going to turn? Are you going to refinance them out? What are you going to do? How are you going to make distributions? Are you going to offer a preferred return? Are you going to offer, some kind of equity split? What's your plan there? Finally, or also reinvestments. What's the reinvestment opportunity looking like? Are you going to reinvest distributions in order to continue the snowball of buying up opportunities? And if so, you got to figure out your phantom incomes considerations, because if you do not distribute the profits to your investors and instead reinvest it, somebody still has to pay taxes on those not made distributions. And so you want to keep that in mind and understand that that is a possibility that your investors will have to pay taxes on money they didn't actually receive.
We get questions about that all the time. That's a big one, especially if you're running your fund, for 5, 10 years, and you want to maintain some of those profits to go back into additional properties.
Yeah, and one thing I forgot to mention, and I'm going to talk about this now with diversified strategy. Maybe you also want to think about a diversified strategy. So, for example, not necessarily create a multifamily opportunity fund, but perhaps consider doing a fund that transcends multifamily into just a real estate opportunity fund and name a couple of different asset classes. One thing I meant to mention on the Kathy Crowe slide is I don't want to mention which client this is because, and I'll give him an opportunity to talk about this in a future webinar. But I have one client who's pretty savvy. I've worked with him for a really long time, and he came to me with a very interesting opportunity, and it's a food farming opportunity. Because one thing we've learned is in this COVID-19 era is that we still all need food. And so he showed me a farming opportunity that we just finished the documents on. That was very interesting. And those are some of the other opportunities you need to look out for out there. Again, this is a really high level, not quite in the weeds type of presentation. So we're just giving you some basic ideas so far, but we'll be happy to follow up. If we find a question or a concern that is frequent and interesting, then we'll do a follow-up webinar getting more into the details of all of this for sure. So you guys know where to contact us because you're all on this webinar, so you must have gotten in contact with us on somehow. So let's get to your questions. You see we got quite a few of them, and we're already at 11:33, and I ain't staying past my lunchtime. And my lunchtime's noon, and I get like 3 bars.
I do want to, before we jump into the questions, I just want to let everybody know if you want to rewatch the webinar, if you know somebody who was not able to make it and they'd like to see it, or if you want a copy of these slides, we are going to make them available, but it will be through our private Facebook group. So I think many of you are already a part of that, so thank you for joining. If you aren't already, the name of the group is Crowdfunding Lawyers. So if you want to just join that, then we will repost all of this for later so you can watch it.
Yeah, and it's the group, not the page. So make sure you join the group. All righty. So I'm going to get to this first question. I'm going to take the first one, Nancee, from Sandra. Sure. Hopefully you can take the next one. Sandra asks, asking for a friend who lives in Australia, due to time difference, she can't join live. Does your firm handle syndication?
For family.
Yeah. Firm handle syndication structure for overseas, such as Australia? Yes, so we do. I did this really great offering several years ago for a big, huge apartment building complex. It was all Australian investors, so we structured it for them, and they were able to come over to the United States and invest their money. And it was both. It wasn't necessarily Australia law compliant, but what it was not just securities law compliant, but tax structured so that the taxes made sense for the people investing from Australia without having to go out and get an American EIN. So Nancee, I'm going to let you take that next question.
Sure. This is from Christopher McCarthy. It's S Corp or LLC? Which way, since I thought LLC could not own other LLC? So generally we structure these where your opportunistic fund is an LLC and we make it manager managed. And then we create the manager would be another LLC. And that's what people would call your general partner or the sponsor. I would say that's general. Now, there are specific clients where sometimes a partnership makes sense, or even sometimes maybe a corporation. So that would be something that we would specifically talk to you about your situation. But overall, I would say generally do the LLC, and the LLC is a manager.
myself. Okay, the operating agreement will define the type of assets the fund will invest in, or can it be wide open? No, it can be wide open. But I want to speak for a second from a marketing point of view, right? If you just say, we're going to buy whatever we want, wherever we want, your investors have no idea what you're really investing in. So just for your own sake of being able to more better.
We're better marketing.
We're better marketing.
Don't do us for marketing.
No, but for the sake of being able to have like a very a good story, if you will, you do want to have some kind of story. So whatever that story might be, you can most certainly keep it wide open, but have a good story and invest with whatever you want, but tell me why we're doing that. And if you don't start with that why, your investors just won't invest. So I can tell you why for every single category we went through, and then I could even give you a why as to why we would have a broad-based fund. So let's just say all the people I'm referring to, because there's very specific, even the people I didn't name in this webinar, there's specific people behind every single aspect I talked about. So you could start a gold fund, you could start a real estate fund, you could start a software fund, you could start. So how could I do this? Well, look, our management team is made up of 5 people. And of those 5 people, each person is going to have a different role in asset acquisition because we want to have a diversified portfolio. And that's how you could do that. But you really need to be able to tell me why and how. Those 2 things, why and how. Why, what, and how, in that order. Why, what, and how. Why, what, and how. Okay, so how about the next question, Nance?
Paul Wendy, how about fund of funds? So yes, you could create an opportunistic fund that instead of going out and looking for a specific asset class, you are actually looking for other funds out there that are already set up and get invested in those. So you just got to work out how you would be compensated that way, how your investors would get paid, on making sure those funds that you invest in are actually stable, good funds that you trust the sponsors and know that what they're investing in makes sense. But yes, that's definitely an option.
Okay, so Melody asks, I am involved in gold mine investment and a cannabis business that we're looking for investors. The gold mine is probably the largest mine in the US. If you have any investors, please call me. Melody, no. That's not how it works. You got to have your documents together and make sure you have a good, if you have a PPM and you have an operating agreement and you have a structure together, yeah, absolutely. But other than that, we're not going to be bringing you investors if you haven't done that legwork up front. We kind of have a policy of like, we will only bring investors to people who we've done the due diligence on. Actually, I'm going to be perfectly straight with you. We'll only bring investors to people who are our clients for the most part, unless it's just somebody we can't help from a legal point of view, then we'll make those introductions if it works for our client or our contact. I'm not going to wear out my list with, random offers. Okay.
I'll take Jeff. I'll do the next. Jeff says self-storage is huge. You're right. All right. Okay. Robin Bell says, whoops, I lost that. Okay. What is your client engagement model for your legal services in various fund development, funding facilitation areas, whether it is deal structuring, fundraising strategy, DFY funding, facilitation, etc., fixed fees, 100% fee in advance, JV option, monthly recurring consultation fee? I'd like absolute clarity on this, please. Okay. So the way it works, if you are interested in creating an opportunistic fund, go to our link here at the bottom, and there is a calendar on there. And Jillian and I and another attorney in our office, Jeff, we offer free 15-minute consultations. So with that, we would talk about your specific legal needs and what those would cost. Generally speaking, we do charge a flat fee So you don't have to worry about every email and every phone call to us. It works well for us, works well for you. It's based on how much money you want to raise. And we also offer a lot of continuing legal advice as well. So we will tailor the specific needs to whatever it is that you want, and just give us a call and set up that consultation. We can go over that with you.
Exactly. And one thing I really want to offer clarity on this to the whole audience is, as far as funding is concerned, I always tell people this: you're not paying us to raise money for you. You're paying us to do a
Hope you muted.
good job. Yeah, I muted myself on purpose. It's because I was afraid the dog was going to start barking again, and I didn't want to blast everybody's ears. So you're paying us for good legal counsel and good legal documents, right? But with that being said, if we have a relationship that makes sense to make an introduction, we will not hesitate. I'm saying the exact opposite thing that I said to Melody, right? Because, I'm not going to send everybody investors. I'm not going to send everybody investors because I need you to have great legal documents first before I introduce you to any funding platforms, broker dealers, potential investors, other funds. Prior to making those introductions, I need to make sure you're legally sound. And also, not all relationships make sense, right? If I have a family office that wants to invest at least $5 million in every deal that they do, and your deal's only $2.5 million, it doesn't make sense for me to introduce you to them. So we're going to make sure that any introductions we make sense first. And then as far as other relationships, we'll happily make those introductions, once we get your documents done and you're in a good space.
All right, I'll do the next one. Christopher McCarthy, could you have one admin for multiple funds, one for real estate, one for business? So yeah, a lot of times we'll see where that managing LLC would have multiple subsidiary LLC. So it could have the investment fund that it's managing. It could have a separate syndication. Again, we work through structures on an individual basis for whatever makes sense, but we often will have a sponsoring entity manage multiple subsidiary entities doing different things. We just want to make sure it makes sense and that you're not creating additional liability that you shouldn't be.
Yeah, exactly. Okay, so does the usage of the word opportunity refer to fund type number 4 below? Core plus, value add, opportunity, and distress. Yeah, it describes number 4, opportunity, and then you're getting into see how this all works, right? You have core, which is like, okay, we're already doing great. Core plus, we're doing great. Everything's going well. You're buying a cash flowing property. All is well. Then value add is like, that property that has 85% occupancy and has deferred maintenance and we want to add value, or it's under rented, whatever the case may be. And then opportunity, we're presenting here. And then distressed is like, there's somebody drowning, it's in bankruptcy, it's not going well. And we want to come in and get like a real bargain, but we're probably going to have to put in a lot of cash to get that real great bargain.
Okay, Raymond, do you need a security license to syndicate the opportunistic fund? So as long as you're acting as the sponsor, your responsibility is to provide your investors with the correct legal documents. You do not have to have an actual security license to raise money from investors if you are the sponsor.
Oh, this next question is a great question. I'm actually really happy I got to answer it. This is from Mo. Can you walk through when the money can be raised versus when it needs to be deployed? In a syndication, I'm used to already having the asset under contract, then raising capital. What if we haven't identified the purchase yet? Great question. And no, you really don't want to identify the purchase with an opportunity zone. I did it myself with an opportunistic fund. You want to be able to have that cash in hand and then go identify those opportunities so you can act quickly. And so what do? How do you say to your investors, I'm holding on to your money? In all our documents, what we do when we have these kinds of situations is we put in them that the sponsor can hold those funds for up to 4 months before deploying the capital. And that gives you an opportunity to find things. Look, these people can't do this opportunity themselves. So we want you to be able to do the opportunity, you do the opportunity for them as a group. And one of the things of doing an opportunity is that opportunity fund is that you have to have the cash in hand, and sometimes you have a waiting period.
Okay, so Mark, hi Mark, good to see you. This is kind of the same question a little bit. Is the fund typically funded up front? And if so, are the fund investors paid interest even before it's deployed into an opportunity? So you can start raising your money day one once you're start raising money. So once you have your documents done and you're ready to go, you can start raising those funds. And like Jillian was saying, you can keep them in an account up to those 4 months. If you want, you can offer that as an option to pay interest to your investors. Not required, just disclose whatever you decide to do. Another thing with funds is you can start deploying that money before you raise your total amount you're trying to get to. So let's say you have a $5 million fund, you've only raised $500,000 so far, but you've got an investment opportunity. You can already start to deploy that money and use it and continue raising money up to that maximum amount you're trying to raise. So there's a little bit of flexibility within the fund.
Okay. Pancham Gupta. And Pancham, I haven't heard from you in a long time. You best call me. So Pancham asked, what happens to the raised money while it's sitting in the fund? Does it earn anything? I understand that you can structure it in any which way you want, but if you're not able to find an opportunity soon enough, then you might be sitting with this money and no place to be deployed. So this is the same exact question, right? So it may get not that easy to raise funds into this open-ended fund. Not true. I mean, people are doing it all the time. That's what hedge funds do. That's exactly what hedge funds do, is that they raise a bunch of money, hold on to it, find opportunities, and then act quickly. So it's all about the narrative you paint, and you've got to get out of your head. You've got to get out of your head that my investors don't want their money sitting around. Well, guess what? Those investors that didn't have their money sitting around when the stock market took a dive a couple of weeks ago were really happy to have their money just sitting around doing nothing, right? Because now they have exactly the same amount of cash they had before the crash. You've got to get that out of your head, that your money has to constantly be working, or that your investors' money has to be constantly working. Where do you think your investors' money is coming from? It's not coming straight from one deal. Most likely, it's coming from some bank account where it was sitting, right? Or a money market or a CD or something like that, where it's easy to liquidate. And not that the stock market's not easy to liquidate, but some people just might not want to liquidate right now. So you got to keep that in mind. If they want to be part of these opportunities, there's a waiting game. It's not instant gratification. You and I all know this, and you just have to make that clear to your investors and not bat an eyelash when they question you about it. I might hold on to your money for up to 4 months. You won't be making any money at that time, but your money will be in a money market account or some other kind of safe haven. And I can call a money market safe. It's FDIC insured, it's a bank, all that other good stuff. So that is a safe place for their money to be.
And that's the thing too. We disclose all this to the investors, so they know coming in that is what's going to happen. And we do that intentionally because we don't want them to be upset and come back later and say, well, I thought I was going to be getting distributions. Well, no, we're very clear and want to make sure they are very aware and know your plan. And so then when they get on board, they know and they're good. Paul asked, did Ryan do a Reg A or Reg A plus? I believe he did the Reg A plus.
Yeah, I mean, he did a tier 2 regulation A. That's what it's called. It's up to $50 million. That is what he did. Okay. Is it my turn? It's my turn.
Yeah.
Can you set up the fund as a REIT? Yes, you can.
Can you, Tasha, can you have a Reg D 506C and a Reg A tier 2 fund going simultaneously and on your website? So yes, you can have those simultaneously. Oftentimes we will recommend you start with your 506C and offer those accredited investors a little bit better of a deal as more of a marketing tool, kind of entice them to get in sooner, they get a better deal, and then transition into that Reg A for the rest of the investors. So it helps to pull those accredited investors in first.
How are new offerings being accepted in the investor world? Do you see hesitation during this COVID-19 period specific to real estate related industry? No, I'm not seeing any slowdown. I'm working more than ever. It's kind of weird.
I think a lot of people are scared of keeping their money in stocks, and so they're pulling it out and trying to put it somewhere more secure, like real estate.
It's so weird because Nancee and I, probably a couple weeks ago, we were like, okay, it's probably going to slow down a lot. Let's plan. And we had all of these grand plans of all these wonderful things we were going to do with our children all summer. I'm not joking. This is a real conversation. Like, do you need money? No, I don't really need money. Do you need money? No, I don't really need money. Okay, we're just going to, pay everybody on payroll, and we're going to take this time to spend with our kids. I've spent no time with my kids. My kids don't even recognize me because I sit in a room all day and don't talk to them. I probably talk to them less now than I did when I was working in an office and driving to school every day. So
my daughter asked me last night.
I don't know if you got my answer, but it's not slowing down.
No, my daughter last night was asking, why do you have to work at night? Because there's so much to do. Anyway. All right, Mo, how do you determine when a fund closes if you're constantly purchasing assets in the fund? So that's something you want to decide beforehand about how long you want your fund to run. And again, it's not a hard set date because it will, we don't know where the market's going to be in, say, 5 years. So we give a little bit of a range to give you some flexibility. And towards the end of that range, you would start selling your properties and closing out.
Okay, Ian asked, how long does it take to create the fund and get to the point where I can collect funds? Ian, if you're prepared, we can get it done in 2 days. If you're not prepared, we can get it done in 2 weeks. So look, you want to be in between 2 days and 2 weeks in terms of planning on your timing. If you are not prepared and you need a lot of hand-holding, it is not going to take 2 days. And that's not because of us, that's because of you. You need to be able to look at your documents, read them, make decisions, think about things that you perhaps didn't think about, and mull those over. And you don't want to rush into this, so you want to give yourself plenty of time to make those decisions and be happy with the decisions you make, because once you set out to do what you want to do, that's it.
All right, Joseph says, would the funds be liable for anything that happens legally in one of the individual assets? So we set everything up as an LLC, and that you wouldn't have any personal liability. It would just be to whatever level the LLC would be liable.
Mm-hmm. Okay, Mo, is a fund still illiquid for investors, or is it easy for someone to buy their position in a fund versus a syndication? Mo, this is all dependent on how you set it up. You can do a redemption policy. We've done plenty of those before. I don't necessarily recommend them. I don't think you need to make this liquid. I think you have to set your parameters very clearly, and then go out and just tell people, look, I'm going to hold on to your money for 5 years. That's it. So don't give me money that you need in the next 5 years. If you do, however, want to put a redemption policy in there, you most certainly can.
All right, Robin, how will you handle hundreds of requests for service arising from this and other webinars? Is it a first come, first served basis? Is there an opportunity assessment and grading process? We will take you. No, we have a means set up to be able to take in whatever we need. We just get you on our calendar and we'll give you our time frames and try and do whatever we can to make it work for you.
Yeah, we have 3 lawyers, and then we have a slew of behind-the-scenes support staff. So when I tell you 2 days to 2 weeks, it doesn't matter how busy we are. We can do it. Yeah. It doesn't matter the volume we get after this. We have a system in place that we can handle it. Oh, for me, sorry. I answer all your questions, sorry. I feel like I have to interject. Yeah, I don't know why, because you answer them just fine.
I'll take your interjections. That's fine.
I don't know what that means about me. Can you touch on management of the fund? Do people manage themselves, or do they hire someone, especially with books distribution?
Good question.
Yeah, this is a great question. So, like I said, one of the things we pride ourselves in as a firm is that we don't want to just give you these beautiful legal documents and then send you off to the wolves and not be prepared. So if you feel, or we feel, that you need an extra service provider to help you with some of these things like management of the fund, we will introduce you to those people. And we have a Rolodex full, no one uses a Rolodex anymore, but we always refer to a Rolodex as the way we contact people, right? So anyhow, we have a Rolodex of people that can help you with fund management.
Speaking to anyone below 30, they won't know what you're talking about. Maybe below 40.
I never even owned a Rolodex. Like
my parents did.
Yeah.
I do know what it is, but
yeah. So we have a whole slew of people who can help you with either, like, from a simple software solution to full-blown fund management, from bookkeepers to CPAs that will service all your investors. We've got it all. We just have to know what it is you want to do, how much service you want, and then we put you in touch with the right relationship. I'm not going to introduce you to 10 different people so you have 10 different conversations and you walk out confused. I'm going to listen to what you have to say and go, okay, I know the person for you, and introduce you to that one person. And by the way, if you use my person or my company suggestion or whatever, is fine. We don't get insulted if you don't.
All right, Phil and Mel, can you touch on management of the fund? Oh, wait, no, you didn't. Sorry. Let's do Michael. Can you talk to raising capital, or is there a different program for that? Oh, so many things I want to say about that. And I'm actually glad you brought that up, because on Thursday at 11, through our Facebook group, we're having a special guest and is going to be talking to exactly that. So anyone wanting to learn more about that, definitely join us there. We also have so many resources. We have a YouTube channel with lots of videos on how to raise capital, former webinars that we've done. And then Jillian also even offers a private course that helps walk you through this entire process. So we have a lot of resources. Depending on where you're at in the process, we'll guide you to the right place.
Oh, my turn. Alexander asks, does it make sense to do this for only one asset versus multiple assets? In other words, apartments. It just depends. Like, if you find like a 250 unit apartment building that's going to cost quite a bit of money to take down, then you'd probably only want to do it for one apartment. And actually, Alexander, if you're interested, I do have like a really interesting deal. I think you already saw it though in Frisco. So, but I'm pretty sure you already saw it. That's pretty opportunistic in nature. Actually, it's a little more distressed than opportunistic. Okay, go ahead, Nancee.
Jeffrey, I'd like to get multifamily modulars built for low-income housing and for the homeless and inmates here in the surrounding cities of San Francisco. How do I create the funding? Awesome. That sounds like a really great project.
Okay, yeah.
You set it up again like any other fund. So you can do it either through the 506B or 506C. And then just make sure you get your legal documents in order to be able to start raising money for that specific type of asset.
Honestly, again, I'm answering your question for you, but
no, go for it.
But that one posed a very unique set of circumstances.
It did.
I would like you, if you're really interested in doing that and you're very much thinking about doing that in the near future, please either have an appointment with me or Nancee to discuss that with us, because I have another solution for you that's unique to California and California investment opportunities.
You want to stick with just California? Okay. Yeah. Yep. I know what you're talking about. All right, that works.
So Derek, not sure if it was covered. Can you briefly go over the process of creating a fund? What do we need to supply? Legal docs, timeline, approximate cost. I'll start with the last question first. Approximate cost just depends on how much money you're raising. It's a range. You can expect anywhere from $12,500 to $20,000 is a good range to think about. Most of our clients spend about $15,000. That's a good number to start with. Then if you want to talk about the docs, it's simple. PPM, operating agreement, subscription agreement, all your docs that you need to file with the state regulators and the SEC. And then we also review all your marketing materials, give you 6 months of ongoing legal support. And the timeline is 2 days to 2 weeks to get it all done for you.
All right, Joseph, can a fund change its mind about which asset class it chooses to invest in? So yes, in order to do that, if it's a substantial change, basically you and all your investors have agreed to your operating agreement and what your company is going to invest in. And so if you want to substantially change that and invest in an entirely new asset class, then you would take a vote. And if everyone agrees to do that, then you could add that. And you definitely want to reach back to us so we can make sure you disclose the appropriate risk factors, but you could make that expansion if you needed to, and everyone agreed.
All right, this is going to be our last question because I told you guys I have lunchtime at a hard noon, and we're already at noon, so I'm getting very crabby. Are there any special, and by the way, before I answer this last question, if you're feeling like I didn't get to your question, don't be sad. We're going to collect all these questions. We'll answer them on the Facebook group. Sorry, Raymond, any special tax considerations? Well, we went over one, which is if you decide to reinvest distributions, there are going to be some special tax considerations there for sure regarding phantom income. Are there other tax considerations? It just depends on the assets you're buying. If you're buying real estate assets, then you're going to have depreciation. You're going to perhaps have bonus depreciation. There's other assets that also come with bonus depreciation. So you want to consider those as well. And then also the CARES Act came out with a bunch of extra tax advantages right now. And I am not a tax attorney, so I don't know all of those advantages, but Amanda Hahn, our lady who we, Keystone CPAs, her and her husband run Keystone CPAs, and they did an amazing presentation for us on the CARES Act. So if you want to check that out, we have that archived somewhere. I'll have Lauren put it up in the Facebook group so you can find that. Definitely watch that. That will give you some great stuff beyond the PPP loan, which is, dead as a doornail now at this point, I think. So check that out when you get a chance. All right, everybody, thank you so much for your questions and your time and listening to us and all that other good stuff. We will be doing these quite regularly, and please don't forget to check out our interview on Thursday in the special Facebook group. Be sure to join that. Thanks, everyone. Have a great rest of your day.
Thanks, everyone. Bye.